Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday 25th of September, recording the video 8:30 p.m. Eastern Standard Time. I was expecting it was most likely that correction was over and the fifth wave up had begun. That's not what happened. One of the alternate wave counts was confirmed with a movement below 1978.63, which invalidated the idea that the correction was over. The target for it to end was 1968. Price is below that target and the structure is incomplete. I'm expecting more downward movement. The target is now 1953. I do not expect price to touch the upper of the two aqua blue trend lines on the daily chart. At this stage, those trend lines again are critical. This is the daily chart, and the difference between the bull and bear wave counts is at the daily chart level a degree of labelling. The structure within them is seen as in exactly the same way. This long movement is seen for both as an impulse. For the bull wave count, it's an impulse for intermediate wave 1. For the bear wave count, it's an impulse for primary wave C. So the short-term structures, invalidation points and targets are all exactly the same, so I'll only go over the bull wave count at the daily chart level. Within this impulse of intermediate wave 1, minor waves 3 and 1 have a very close Fibonacci ratio of 2.618, so I'm not expecting to see a ratio for this fifth wave to either 3 or 1. Within the fifth wave, there's no Fibonacci ratio between minute waves 3 and 1, so I will expect to see a ratio for minute wave 5. So the target for this impulse to end is best calculated at minute degree, and I'll do that for you when the fourth wave is ended and I know where the fifth wave begins. I can't do it yet. Within minor wave 5, we have 1, 2, 3, 4 is close to completion, and then we'll have 5 up. 4 is unfolding as an expanded flat and it's very shallow. 2 was a relatively deep zigzag, so there's perfect alternation between the two. 4 is most likely to end before it touches the upper of these two aqua trend lines. This upper trend line began over a year ago. It's repeatedly tested. Each time it's been tested, price comes close to it but doesn't quite touch it. It hasn't been touched, let alone breached, in over a year, so I expect that trend will continue for the S&P. These trend lines are drawn using a classic technical analysis approach. They are not an Elliott wave channel. There are very clear instructions every day in the text article on exactly how to draw them. Because the upper one is somewhat shallow and it's repeatedly tested, it's extremely technically significant. So I expect downward movement for at least one more day, maybe 2 or 3, to come just short of this blue trend line right here. When that's done, we'll have a target for the final fifth wave up for you. Minute 4 can't move into wave 1 price territory below 1850.84, but I don't expect price for this correction to get anywhere near that invalidation point. Let's have a look at the hourly chart where the end of minute 3 and the beginning of 4 is here. We have a 3, 3, 5 expanded flat correction. Minuet B is 125% the length of minuet A. Minuet C has now passed 1.618 the length of A. The next target I could calculate at minuet degree would be where C is 2.618 the length of A. But I don't think that will be reached because that would see that aqua trend line overshot, and I don't think that's going to happen. So I think the target for this to end is best calculated at sub-minuet degree, especially seeing as there's no Fibonacci ratio between this third wave and this first wave. So the fifth wave will reach 0.618 the length of the third at 1953. The third wave also importantly is shorter than the first wave, so the fifth wave has a limit. It may not be longer than equality with the length of the third wave. The maximum limit is 1940.9. If tomorrow when markets open we see upward movement to begin, it may be the fourth wave correction continuing and it can't move into first wave price territory above 1978.63. But I think it's most likely the fourth wave is over here and the fifth wave down should begin tomorrow. We are seeing an increase in momentum for the third wave. This wave count for this minuet wave C is supported by MACD. We should see some divergence as the fifth wave comes to an end. It should show a slowing in momentum. Draw a channel around Minuet C using Elliott's first technique from 1 to 3 with a copy on 2. In the first instance, when this channel is breached with upwards movement, that'll be trend channel confirmation that this C wave is over, and so at that stage I'll take that as trend channel confirmation that the whole fourth wave correction is over, because expanded flats just don't fit into parallel channels. So we use a channel around these C waves, and when that's breached, I expect the correction is over. At that point also, subsequent movement above 1978.63 would provide some price confirmation that Minuet C is over, because at that point upwards movement could not be a fourth wave correction because 4 should not move into 1. When the fourth wave correction is over, I'll be expecting a resumption of the upward trend. That's all for me today with your S&P analysis, and I hope that all our members are having an awesome day.